What is money? Money often has no intrinsic value. Instead, money is an object with a value placed on it, allowing for the trade of goods and services. Some money, such as metal coins, has actual value in terms of the materials used. However, even these currencies derive their monetary value more from the faith people in a society put in them. Throughout the evolution of money, currencies have taken several different forms. When was money invented? The earliest evidence of money comes from around 3000 BC in ancient Mesopotamia, modern-day Middle East. Citizens would draw agricultural symbols on clay tablets to represent debts. This is the first time in history we're aware of people using a symbolic representation of value rather than a physical exchange, as in a barter market system. History of bartering. Before the invention of money, people traded goods and services using the barter system. One farmer might trade livestock for vegetables, while another may trade labor or lumber for livestock. These transactions were the early building blocks of our modern economy and would go on to create the future of money the world knows today. The history of bartering dates back to 6000 BC, when Mesopotamian tribes introduced the concept to the Phoenicians. Goods were exchanged in the absence of money, including things like tea, salt, weapons, and food. As time went on, bartering continued to evolve, with colonial Americans trading pelts, crops, and muskets. First metal money, coins. The first metal coins date back to the 7th century BCE in Lydia, modern Turkey, and China. In China, metal coins were made of bronze and shaped like farming tools. In Lydia, coins were made of an alloy of gold and silver called electrum. Lydian staters were the first coins to be officially issued by a government body. Early iterations of coins were also used by ancient Greeks, starting in the late 7th century BC. First metal money, Lydia stater coin, believed to be the first coin. First paper money. The first paper money was created in China during the Song dynasty in the 11th century CE. Trade played a huge part in its creation. For hundreds of years before the invention of paper money, bronze and copper coins were the main currencies in China. As international trade increased, the weight of carrying these coins became a barrier. Around 900 CE, merchants trying to get around the weight issue of carrying coins began trading transaction receipts. Early Song authorities gave a few shops a monopoly on issuing these deposit receipts. Eventually, in the 1020s, the government took over and began issuing the receipts as the first official paper money. First paper money from the Song dynasty, widely believed to be the first paper money. The introduction of banks. Today's banking system in the West has its roots in the early to mid-Middle Ages. In this time period, three primitive banking professions emerged. Pawnbrokers. They functioned similarly to modern-day pawnshops, offering temporary loans in exchange for personal property. Money changers. These citizens charged a fee to exchange currencies. Merchant bankers. At the top of the social classes, these wealthy citizens offered loans from either personal funds or from partners' funds. Many of these banking operations originated in regions of Italy, including Venice, Florence, and Rome. Over time, these services converged with the onset of modern banks. In the United States, a national bank began with a plan by Alexander Hamilton, the first Secretary of State. He thought a national bank would help stabilize the nation's credit. The first bank in the U.S., the Bank of the United States, was established in 1791. The gold standard. In 1816, gold became the standard of value in England. Each banknote represented a certain amount of gold, so only a limited number of banknotes could be printed. This gave previously unbacked currency some semblance of value and stability. By 1900, the United States had followed suit with the Gold Standard Act. While the gold standard would slowly fade out of usage by the 1970s, the gold standard played an important role in the history of U.S. money. The first online marketplace was called Boston Computer Exchange, and it launched on the web in 1982. By 1995, Amazon and eBay launched, and both sites made 1 million sales by 1997. In 1998, PayPal launched, providing online shoppers with a more secure way to make payments. In 2009, Square launched, helping retailers accept debit and credit card purchases online and in stores. Today, around 96% of Americans have made purchases online.